there's a line in the movie where a one of the characters says, "When there's blood in the streets, buy property."
Okay.
And I remember when I heard that, I was like, man, that's interesting. And I was already familiar with the quote of when others are greedy, be fearful, and when others are fearful, be greedy. So like I already had some context when I see and hear this quote in the movie. And then I also knew, generally speaking, that real estate is such a wealth builder.
Let's go. Welcome to House Rich, the millennial real estate show. We talk to average people that have done above average in the real estate and show you how you can do the same. So today we have Steve Stack, financial coach, going to talk about his journey to financial independence. So a lot of people say they're financially free, but they go to a 9 to 5, which no knock on that. I work a 9 to 5. You guys know I'm an underwriter, but he doesn't have to go to work. So that's really financially free. We're going to talk about how he got there through real estate, investing, and a little bit more. So thanks for joining me. Could you introduce yourself to the good folks as well, if that intro was not satisfactory?
Oh man, no, it was great. First off, man, thanks for having me. You had me cracking up on the 9 to 5 piece, which truly nothing wrong with having a 9 to 5. You want to do something anyway. Just in life is my thought. If I were worth $200 million, I still would be doing something each day.
Sorry, I didn't mean to cut you. I forgot to ask something. So you're a debt-free millionaire too, right? I think I.
Yeah.
Okay, I want to throw it out there as well. So yeah, okay. Oh, sorry. Keep going.
Yeah. No. It's cool. Yeah, no, that is true. 100% debt free. I actually chose to pay off my home as well. And for those who may be wondering, obviously personal finance is personal. And I would share that I was actually already a millionaire when I went on ahead and paid off the home. I actually had a real estate deal go way better than expected, and just said, hey, you know what, I'll go on ahead and knock out the rest of the house. And yes, I've been a millionaire since age 31. So yeah, been here for a little bit.
Okay, sorry. Hopefully, y'all can hear me this whole time. My microphone was behind my computer for some reason, so my bad on that. So let's talk about that. So we're going to jump back to your origin story. But I want to talk about what was this real estate that went extremely well and then help pay off the crib.
Yeah, so I had a there was a multifamily property that I had held for the better part of a decade. It wasn't quite 10 years that I'd had it. I want to say it was more like 7-ish, 8 years, something like that. And I had gotten what's called a pocket offer. Like I didn't have this property on the market to sell. And what I saw from is it was the number that I wanted to sell this property for when I first purchased it. So it was a multifamily rental property, and I'd already established, hey, this is the number that I would like to sell for after holding it for at least 5 years. So when I saw the offer, what it said to me was, okay, if I actually were to put this out there, because I don't need to sell it, like it was cash flowing, I was doing very well with this property. It let me know kind of where the state of things were at that time. So once I did actually put it on the market later, it sold for significantly even more than what I thought that it would, just from getting that offer. I knew it would be more than what they offered, but I didn't realize it was going to be that much more, and the extra was enough that it was pretty close to going ahead and paying the house off.
Okay, and sorry, I'm not sure if we talked about this before we recorded or you just said it, but you sold this home in 2010? Or would you sell
No. So I had purchased the first piece of real estate that I had personally purchased that I'd say of meaningful
Okay.
value was in 2010.
Oh,
This
okay,
I
okay,
sold.
okay.
Yeah. This property I sold it. This would have been back in like 2018,
Okay.
somewhere in there.
Okay.
Um,
So curious, how did you come up with that number to be like, hey, I want to sell this cash flowing asset? Because most folks would say, hey, once you get, it's hard to get, those multifamily properties, once it's cash flowing, like what made you say, hey, sell? Some folks are like, oh, never sell your property ever. Like, what made you decide to, hey, I'm going to sell this? I know you had a number, but I guess how'd you get to that number?
um, so in general, uh, when I think it's wise when you go into any investment, and yes, and there are things that I want to hold forever or like keep it within the family for forever. Um, but there's good practice of having a number going in that you're like, hey, if I can get here, this is what it'll do. So the way I came to the number was I was thinking about, hey, if I get this chunk of money, this is how I want to knock out different things in my life by that point. So it was relative to, so like say for instance, if I'm speaking to the audience, um, if $500,000 was going to be able to take care of all the things that would launch you towards a particular dream that you have, um, yes, you could hold an asset forever and never realize like the profits of it. Um, but if that amount of money would actually propel you to, let's say, if you wanted to, leave your 9 to 5, or it propelled you to start a business or a restaurant, or whatever the case may be, then that number is the meaningful number for you
Okay.
of 500,000. So like that's really where I came in thinking. And I had bought this property. We're still coming out of the Great Recession from 08, 09, the housing market crisis. So I knew that number was realistic, because it was still south of where the prices were before the collapse. So it was lower than what it was in 2007.
Okay.
So like I knew for that area that it was possible to actually get there.
Okay. Okay. Got you. And so we kind of talked about your first property in 2010. Like what sparked that in the first place? Like, hey, why do? Because I know you mentioned you're kind of more in the investing side prior to that because the barriers to entry were smaller. But what makes you think, hey, I want to buy a property? 2010, kind of right out of that recession to begin with.
Yeah, so it actually, part of the idea literally came from a movie. So,
All right.
and people could actually look this up if they want to. There's a movie called The Inside Man. Denzel Washington's in
Oh
this
yeah,
movie.
good movie. You should watch it if y'all
Oh
haven't
yeah,
seen it. Watch it. Yeah.
yeah. It's legit. And don't worry, no spoilers. I won't mess it up if you've never seen it. Denzel's in it. Jodie Foster, a guy named Clive Owen. Really good movie. I won't spoil. There's a line in the movie, where a one of the characters says, "When there's blood in the streets, buy property."
Okay.
And I remember when I heard that, I was like, man, that's interesting. And I was already familiar with the quote of, when others are greedy, be fearful, and when others are fearful, be greedy. So like I already had some context when I see and hear this quote in the movie. And then I also knew, generally speaking, that real estate is such a wealth builder
Hmm.
for people. I'm not saying that it's the only way to build wealth. It's just a common theme that you see a lot of people that are extremely wealthy have a lot of their portfolio being comprised of real estate. So that was kind of what got me thinking that way of, hey, why not uh, follow patterns that I've already seen. I don't need to recreate the wheel. So I knew I wanted to get in, but I didn't come from a background or a family that was doing this stuff already. So a lot of it I had to figure out on my own.
So why do you think wealthy folks keep a lot of their money in real estate? So, I mean, I think folks would classify you as wealthy. So I'm just curious what from before you were maybe wealthy. I think now most folks would consider you wealthy. Like why real estate?
Man, there's so much. So this word it means kind of what it said. There's so much optionality with real estate, meaning that there's so many different things that you can do with it. It can help you be able to lower your taxable income. So for example, you can use something called depreciation to be able to offset even some of your working income. So if you've got a 9 to 5, and let's say you got a large amount of money in like stock options. Let's say you got a great job and you get like a big chunk of stock options. Possibly purchasing real estate, like instead of saying, hey, let me go buy just stuff, I could buy something that could be an income producing asset. And it lowers my taxable income potentially right now and over time. So that's a plus of real estate. Another plus is just the need for it. So people have to live somewhere.
Yeah.
Like we all have to live somewhere. So there's always going to be a need for it. There's a line, I've heard it over the years, and it's something that I've heard you say too, and I love that you say it, of just, rumor has it they're not making any more of it.
Yeah.
You know what I mean? So it's finite, and there's only so much land that's out there, and particularly like premium land, like in places where people want to be. Obviously you can use it to generate income. So if you're renting out to people, whether you're doing it like long term or just more traditionally, if people are living there month to month, or like short term rentals, more like an Airbnb type of setup. There's so many different ways to do it. You can do things like house hacking, where you say you buy a duplex or a triplex or quadruplex and you live in one of the units and you're renting out the other units. Or because of things like Airbnb, you could just have a single family home, and depending on how it's set up, you could rent out your basement or a guest room or guest suite. So, and another thing I would throw out there too, is that it can be an inflation hedge for you as well. Of And I don't know how deep down this rabbit hole we want to go. But
you can go deep. So folks want to learn, so we can go deep.
Right. Or maybe we keep it kind of surface level. But like, so for instance, I had read an article fairly recently. I think it was a Bloomberg article that said that the rents in like a town like Miami have gone up over 40%.
Yeah.
Which is wild. I think I may even sent that to you or
Yeah.
tagged you in the
I did
story.
a post about that because I saw you said
Right.
it.
Right. I had to make sure the homie gets some content, to work off of. But I can tell you the cost for that real estate did not go up 40%.
Yeah.
You know what I mean? So yes, did property taxes increase? They did. Potentially, if you got home insurance, property insurance, did that increase? Yes, it did. Did it go up over 40%? No, it didn't. And then just another side thing. So I'm gonna try to contextualize it to right now, the times we're dealing, higher inflation.
All right.
or higher inflationary times is that is a benefit to landlords, because let's say if you have some fixed rate mortgage on your properties, uh, you don't care that interest rates went from 3% at the beginning of this year to over 6% now,
Yeah.
because you're already locked in to a low rate already. So you just get the benefit of, okay, things cost more. I'm going to raise the rents relative to what the market rents are, but your cost haven't dramatically increased. So
Yeah.
those are just some examples. Obviously, you can actually leverage against your property too. So like you could tap into capital, like doing something called like a HELOC, a home equity line of credit, or just pull money out of your property to do other stuff. People talk about methods like BRRRR. There's just a lot of different things you can do with real estate, that you can't necessarily do with other asset classes, or just being able to control a lot more money with a smaller amount of money, if that's the route you want to take.
Oh, okay, okay, thank you. And so then I want to jump back from, maybe, I don't know, college graduate, college student to how do you end up buying like your first property? Like how did that process even start?
So for me, like I said, I didn't know anything about real estate investing. I had read some books. I actually did spend money on like some type of a program, and getting some mentorship, to just try to move in that direction. But and I'm not upset that I paid that money to do that, because I was hungry. I wanted to roll there. And to put in perspective, this was back in like 2009. So, with inflation, I know the money would be worth more today.
Mhm.
But I think I know I had spent at least $5,000 just trying to acquire knowledge,
Okay.
around real estate. But here's the funny thing though, is the stuff that I ended up learning the most wasn't from that money being spent. Did I learn some things from there? I did. Um, but I learned more from just making relationships with people who are already doing it, and like just talking to folks and saying, "Hey, this is what I'm looking to do." And so I ended up getting connected with someone at actually at like the local church that I was attending, when I was living in the town at that time, that was doing things in real estate. I had money saved up, um, and they connected me to a trusted realtor, like someone who was competent and had character, just good people.
Mhm.
And then he connected me to contractors, because realtors tend to have a lot of connections, whether it be to mortgage lenders,
Yeah.
and loan originators, and painters and HVAC people. You know what I
Yeah.
mean? Like so I started to build that kind of network, and there's things called like RIA meetings, where you can go to like real estate investor association type meetings
Okay.
locally, to just get in the space. But then ultimately, I had a realtor like sending me properties that fit what my budget was and what I was looking to spend. Um, and all this stuff I'm talking, this was like right after college, so I'm in my early 20s. Um, so I found a property, and my first real estate investment was actually a flip.
Okay.
So, I bought a property that was foreclosed on, put money into it to fix it up, and then sold it for more than my acquisition and repair costs and holding costs. So,
So how'd you go about a flip? Because obviously, typically flip's not someone's first deal. You got, like you said, you got to have those connects and trustworthy people. So yeah, to me that seems abnormal for someone's first property to be? Most people are like, hey, I just want to buy a house and live there. Like, why'd you? Was that something like you learned in that training, or what made you say, hey, I want to flip this property?
Yeah. So if I had been just left to myself, I would have bought a duplex and just lived in one side and rented out the other.
All right.
Um, so like the first property I actually bought in my life was the flip that I mentioned. I didn't buy a home to live in until afterwards. And I was living in the Midwest at that time. But because I wanted to try to do a flip and make a chunk of money to buy a multifamily property, that's why I started with the flip.
Okay.
And I felt that I was ahead of most people because I had already built a trustworthy team.
Okay.
So I'm like, okay, I have a realtor who actually he was or was and is a real estate investor. And so he's like, hey, you might really be able to make this happen. I know, I know contractors, people that do the different stuff. I can help you with putting a team of people together. So that's the reason why I started there, because I'm like, hey, well, if I could do this and let's say I make just a decent chunk of money, like if I can make anywhere from 15 to 30,000, that would go a long way to helping me actually secure a property to generate um, I say quote unquote passive income because it you have to put in work.
Yeah.
It's
Yeah.
it
Yeah.
you know what I mean? Like people say passive, I'm like, no, you still have to put in work. You're
Yeah.
still calling property managers, or you may have to talk to tenants if that's something you have an appetite for, or making sure repairs and things like that happen. So I mean, there's still work to it.
All right. Thank you. And so, at what point do you say, hey, I want to purchase a property to actually like live in? Like, when do you get to that point?
So that was in 2011.
Okay.
2011 was when I bought a house to live in. The market was still down, and I'm in the Midwest, which uh, it was they may not have dropped as far as some other areas, like maybe say like a Florida, but they also didn't bounce back
Mhm.
as quickly either as some areas like that. Um, so I was looking to either A, get a duplex and do what's called house hacking, again, live in one side and rent out the other to possibly live for free
Uh-huh.
or significantly discounted,
Yeah.
or I wanted to buy a foreclosure. Um, and because I had already done a flip, I was I felt much more confident in the home buying experience, because I'm like, man, I don't care what y'all are trying to tell me. This is how much I want to spend.
Gotcha.
Um, you know what I mean? And it worked out, man. It worked out. I was able to find a property. It was actually foreclosed on already. Um, it needed work to get fixed up, but because I had already done a flip, none of that stuff bothered me. I'm like, oh man, putting some new carpet in here, some paint, fixing some things. There was like a huge like hole in the wall, which for the average person, especially if your first house to live in,
Yeah.
would be very unsettling. Like, oh my goodness. But because I've done a flip already, I'm like, oh man, dude, that's just some drywall, some plaster. That thing will be great, and paint right over it. So that that was a huge thing for me of getting that, because once I moved from there to now I'm in the Southeast, I'm in Charlotte, North Carolina now. Um, like I ended up netting, like after everything. Like when I moved here, it was a healthy six-figure amount just to come here.
Okay.
Um, when moving off of that, because I bought it as a foreclosure, so it was way under market value. And by the time I moved here, the economy was much stronger.
Okay.
Um,
And so were you seeking out foreclosed properties, or you just happened to come across those were just the ones you found? But like the flip one was a foreclosure and this was a foreclosure?
yeah. I so here was my thought process. Um, at that time when I was looking, and people can kind of do the math and they'll be able to figure this out. So I'm in my like roughly around mid-20s at this point when I was looking for a house to live in. Um, because I had done the flip, um, I was okay if a foreclosure came up that made sense. So like I looked at turnkey properties, meaning looked at homes that didn't need any work. For people who are listening, so that is just you could buy it and you could roll right in and everything's cool. If you're spending any additional money, it's just because you want to make it more yours.
Gotcha.
But I was like, hey, if there is a foreclosure that's way under market value but doesn't need a ton of work, or doesn't need as much work as like a full rehab, um I'd be open to that. And it ended up being an amazing setup. Like I put an offer on it, um and well, I'll quick story here. So put an offer on the house, and it ended up going under contract like right before I did. So I was like the backup offer. I was like, oh man, this one would have been perfect, man. I wish I'd seen it sooner. So I was bummed about it. Um, and then maybe like a week later, that buyer's financing fell through. And so they came right back to me because I was the backup offer, said, hey, you still interested? Was able to negotiate and make it happen, man. So that was really cool.
If you enjoy the show and want to go even more in depth with the content we put out, go to houserichshow.com. We have courses on Insider Secrets Your Lender and Realtor Don't Tell You, a course on house hacking, and even a DIY credit course so you'll never have to pay for credit repair again. And since you're a loyal listener, use promo code POD for a special discount. Back to the show. Thanks. Oh, okay. Awesome. And then when do you start saying that, hey, I'm going to buy more of these properties? Because I know you own about 5 to 10 properties. Like what? So you got the bug there, and it's like, hey, I'm going to start kind of building the portfolio.
Yeah. I mean, once I had done it and got to see how it worked, I'm like, yo, this is not that hard.
All right.
You know what I mean? Now, what I'm not trying to tell people is just, hey, this is super easy and anyone can do. You still have to put in work. You have to look, pay attention, and doesn't mean that it's always going to work out. But for me, I just loved the feel of it. Of, hey, you can really get these properties, and if you buy it right, it can be really hard for you to lose.
Okay.
So I knew I wanted to do real estate, because it's easier, like you can touch and feel it and see it. Um, and so that was like that was attractive to me, that I could actually buy it, see it, be in it. And a lot of the stuff that I said earlier, just the optionality of what you could do. So I was like, yeah, no, I do want to look to build a portfolio with this. And literally, if you know how to add, subtract, multiply, and divide, you can be a more than adequate investor. Like you don't have to real estate investor. Like you don't have to be looking at stock market 10Ks and 10Qs and understanding PE ratios and all that like you can be really simple with it and still win. So I thought that was attractive.
Cool. So how do you actually, you mentioned, you don't have to be like a numbers whiz or whatever. But how do you actually evaluate your deals? I know there's some numbers that go into that, right? Where this makes sense, doesn't make sense.
Yeah. So you can look at things like a capitalization rate or a cap rate that kind of helps you to figure out, okay, uh, it gives you some quick numbers on how much money you could be making. What you make on your money. One of the simplest ones is if you're doing your numbers right of, hey, these are the rents, this is the purchase price, this is my different expenses, looking at something like cash on cash return. You could do something as basic as looking at like a 1% rule of if you're looking at rents. Like, so there's all these different little rules of thumb that they may not necessarily say go buy it, but just as important on the other side, some of these rules of thumb can disqualify properties.
All right.
Which is the majority of the work, is saying nope, 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 nope. You know what I mean? Like going
You
through
gotta
and
be
being like,
patient. Yeah.
right. You really do. Of just like, nah, this isn't good. Nah, nah. Like for people, if you're a sports fan, more games are lost than won. That holds true in investing too. Like a lot of times people lose just for lack of patience to wait. Like they're like, hey, I've got money burning in my pocket, or I just hear that interest rates are super low, so I know I just need to buy something. It's like, man, take your time, do your numbers, you know what I mean, do your due diligence, roll through, and don't have to get a home run. Like, doesn't have to be, but man, just solid wins. Solid wins. And sometimes what you thought was solid can turn into a home run that you didn't expect. So
Got you.
yeah.
Okay, thank you. And so so we started from the beginning all the way. Hopefully we're kind of near present day at this point. But like so as we mentioned during the beginning, you're a debt-free millionaire. Was that the catalyst? Was, you also do, investing as well, stock market. Was that real estate, stock market, a combination? Kind of what propelled you to that number? Because a lot of folks own properties, but like I said, no problem with having debt, but a lot of folks are not debt free and they're not millionaires too. So like, what actually propelled you to that level?
For me, the most meaningful. So I did a combination of both of stock market investing and real estate. They're pretty close, but I would say the real estate was what really propelled me forward, because I had literally, like, I had properties that were giving me 7 to 10x returns, like on the actual capital that I put in.
Oh wow.
For the whole deal. Like if I'm including the actual cash flow, like the rent rates, what I actually made, like through the course of holding it, and then for ones that I sold for multiples over what I paid for it, those really pushed me forward. Was the real estate piece. And then what I did is, I looked to take some of those proceeds and put it towards either buying more real estate or also buying into the stock market or looking to acquire businesses. But like the real estate gave me chunks of money in one shot, that the stock market investing was more kind of the tortoise and the hare, slow and steady wins the race. And all of a sudden you look up, you're like, oh man, I've been investing in the stock market for a decade and a half, and whoa, like that escalated quickly. You know what I mean? So yeah.
So I'll ask this question. So, and I don't know if this was like a slow creep or just happened like during a big deal, but when you became a millionaire, were you like looking at your bank account saying like, "Hey, I'm a third party"? Was it those numbers or what? Was it just another day, just a normal day?
Yeah,
Because
yeah, it was
some
kind.
people they'll be like, "Hey, 999,000." It's like they got the countdown. I don't know if that was you or not. Just curious.
Right, yeah, it kind of like it was somewhat surreal and and like normal and cool, like it was kind of a mix of a lot of different emotions, because the way to think about it is it wasn't like I went from a quarter of a million, 250,000 to a million.
Uh-huh.
Like if that had happened, it'd be like, whoa,
Yeah.
what? You know what I mean? Like crazy. Yo, let me secure this win. You know what I mean?
Uh-huh.
And mitigate my taxes and all that kind of stuff. Um, but it was just more of a steady build. I mean, like I knew it was coming.
Uh-huh.
You know what I mean? Like
Yeah.
eh, once I can remember, like when it's like, oh man, I'm at 750,000. Okay, I'm I'm gonna get there. It's just how long will it take? And then all of a sudden it's like, oh man, okay, you're over 800,000. And 900,000. I mean, like then there's this, like, the closer you get, the more you want to get there.
Yeah. Yeah.
So it's almost like how this isn't the greatest example, but hey, it may help people kind of remember this is like if you have to use the restroom, like you have to use it more the closer you actually get to the bathroom.
Yeah. Yeah.
You know what I mean? So like the closer I was getting to the finish line, it's like, okay, like I want to push even harder to get over the hump, and kind of the way, because I don't want to assume people know what millionaire means. Like it's
Mhm.
literally just your net worth. What are your assets minus your liabilities? Um, so assets meaning stuff you actually own, liabilities if there's things that you owe, that you subtract that out. So yeah, eventually, like I was there, and I didn't call it until like I was healthily past it. So like whatever
Gotcha.
the date was, like I kind of wait, because like if you got some stuff in the stock market too, things kind of fluctuate.
Yeah.
You know what I mean? Like it may, the stock market could be up, 1% one day and down 1%. You know what I
Yeah.
mean? So, but once I probably got a healthy bit over, I'm like, okay,
That's when you
no,
got the
that's
gold balloons and took the picture with the 1 million.
right, right. Somebody came to the front door with a big check. You know what I mean? They rang the doorbell and said, "Hey, you're a millionaire." That's exactly how it happened, y'all. Trust me.
And so you're a financial coach as well. What are some tips you would give folks? So saving for that first property. And I know everyone's scenario is different. And would you recommend like the multifamily route, single family route, or what would you recommend on average there? I know it's kind of two questions in one, but
Yeah, yeah. So this this stuff isn't sexy what I'm about to say, but you cannot run from this. Like first you have to understand what your budget is. So like fundamentally you have to live within your means. You can't spend more money than what you make. Otherwise you'll never get ahead. So
yeah,
you have to have some assessment of how much money is coming in versus how much money is going out, and figure out what are the essentials, and then what are some of your negotiables of discretionary income, and how much do you want to put aside to invest in real estate, so you maybe saving your way up to go buy that first property. um and you know what I mean, so you want to start there with just saying, okay, let me build, which I would say, and this is my personal take on this, so people may feel differently about it, but for me personally, if you have high interest debt, so let's say if you've got credit card debt that's hitting you for 25 to 30%, I would pay that off before looking to acquire a property, just because you are literally guaranteeing yourself if your credit card interest is 30%, you paying that off is literally giving yourself a 30% return outside of taxes.
Yeah.
You know what I mean? Because for you to actually net 30%, you really have to make something like maybe up to like 40% or more.
Yeah.
To actually get taxed down so you want to take care of those types of things first and have some type of monies for, in case you have an emergency or things like that. But those would be the things that I would say that are just foundational. As far as single family versus multifamily, I'm partial towards multifamilies. I think about things like economies of scale, meaning if I'm paying for the lawn to be cut at the property, so I could possibly have a quadruplex or 4-unit property. I've got 4 people living there paying rent, but I only have one lawn to cut, one roof to maintain. I'm big on making sure that a property has separate meters.
All right.
So like I've bought multi-properties before where it was common, so I was responsible for the water.
Okay.
And magically those water bills were high.
Yeah. Well, you don't got to worry about that water bill. You leave the faucet running a little bit longer. You leave
Right.
it going a little bit longer. Like,
Right.
Opening that window.
Right.
Yeah.
Right. I'm like, yo, man, y'all doing water bouncy houses every day. You know what I'm saying? So I invested in actually, any properties that I purchased where the meters weren't separate. Like I actually paid to get that separated, so that the tenants would be responsible for that part. But I say this stuff to say, yeah, so you have some economies of scale if it's just one property, like one building to maintain, versus if I have 4 single family properties, that's 4 different lawns that have to be cut. That's 4 different places you may be sending someone for maintenance to go to, where there could be, issues for. So that's my personal take. And again, I'll say this again, for people thinking about house hacking, it's nice because you could potentially buy a property and rent out the other side if you have an appetite for that.
Yeah, gotcha.
Like if you're okay with sharing a wall with somebody, it can be a great way to get rolling and build up to where now maybe later on you get, a home that's more to your liking, or even if you're going as far as like a dream home, you're like, okay, now I'm moving from here to that. And guess what? Now you can rent out the unit that you used to live in. So you could potentially actually have more income being generated.
Got you. Thank you. Just I guess second to last question. So just for a point of reference, it's late June right now. So a lot of folks talk about it's a recession, we're in a recession. Everyone's giving out their 2 cents on what's going on. What would be maybe some advice you would give to somebody that's like waiting to get in the market, a new investor, or just in general, with what's kind of your take on the financial state of the market, I guess, in the country, or just the market, maybe.
Yeah. Gotcha. So these are the times to get excited. So let me say that of when there's a down market or a recession, these are the times you want to have your antennas be up and really be paying attention, because there's opportunities to be had and to take advantage of. And what I would say for anyone listening, and please lean in, listen, hear me when I say this. Look, my man even leaned in. I love it. So like, this may sound simple, but one of the most powerful things you can do in a recession, I'll even explain this too, is you need to stabilize your income. So you're like, what? That's the big drop. That's the big jump. Yes, It is. You need to stabilize your income, because the worst thing that can happen, or one of the worst things that can happen to you in a recession, is there's all these deals all over the place, but you don't have any income, or you have reduced income. So you're being impacted by the recession. So you need to stabilize your income, meaning saying, okay, let's say if you are a nine to five worker, man, you want to make sure that you're in good standing where you are working. And I would tell you, if you already know you are in good standing, look to increase your income.
Okay.
So if it's doing a side hustle, or whatever it may be, or saying, hey, let me look to get an income producing asset so that I have more money to deploy into the down market. That's the mentality that I want people to have and to think about. And the last thing I'll say, just kind of general, if I'm thinking about the market, my feel for it right now is, I would say, let's say if you have you're sitting on a bunch of money, and I'll just let that be relative to people who are listening. I would probably err towards, instead of rushing all your money in at once, to try to work your way in over time. And some of my thought behind that is I think we'll be here for a while. And if we shade more towards the downside, you'll be happy that you didn't let loose all your dry powder into one shot, and then now you're just kind of sitting back and waiting. So I would say look to work your way in, just because I think we have a real chance to be here for a while.
Okay, thank you. And can you give the folks 3 stocks to invest in? I'm just joking. So my last question. So let's say I gave you $1 million. You had 1 week. You had to spend it all in 1 week on something real estate or real estate adjacent. What would you use it for?
Oof, a milli. I would buy multifamily properties. I would look at potentially some REITs. Like there's actually some that I have my eyes on right now. And when I say REITs, I'm talking about a real estate investment trust. So you don't have to buy a piece of property to still be exposed to the real estate sector. They have things like real estate investment trusts, which they have special rules to where they have to push a high percentage of their profits to their shareholders in the form of something called a dividend. So I potentially look at doing that as far as on the real estate oriented end of $1 million. I would look at multifamily properties, but I would actually look at some single families too. I've been seeing some things that there may be some potential shifts and changes around how those will get treated and some of the short-term rental options that a person could have. So yeah, I would definitely buy physical property. And I would look at potentially some real estate investment trusts as well to generate income for me. That's what I would say for me, because my financial picture is a little bit different. Obviously, I want to continue to grow my wealth, but I also have an eye towards generating income in the here and now off of investments as well.
Okay, appreciate it. Thank you. That was a great conversation. How can the folks get in touch with you? Or if they want to, how can folks get in touch with you? I'll just leave it at that.
Yeah. So it's a couple different ways. I actually have a website. It's just Stephen with a V, lstack.com. So Steven, Steven, lstack, stack.com. So that's one way that you can reach me on social media. So if you're looking at like a IG, for example, my handle is at stacking with stack. And yes, Stack is actually my real last name. I get that all the time. Man, you talk about money, your last name Stack. Oh man, money stacks. Yeah, I know, for real. So you could find me there at Stacking with Stack for IG, which I'm probably most active there. But it's the same handle on TikTok, which I actually do have a TikTok now, and Facebook too. If you were to do Stacking with Stack as the handle, you can find me there as well. But those are ways to be able to actually connect with me, and hopefully just be able to encourage you to keep building. And one thing I will say, gotta say this, and Dave, you probably want to be throwing this out there too, is I will never solicit you for money. So there's a lot of scammers that'll come out and ask you, hey, how's your trading going? Or what's the latest with some, crypto investment trading platform? I will not do that. So just beware if you're following me on one of those pages and you get some random DM, that's not me.
My philosophy in that is I have a page where I talk about exclusively real estate. I have over 1,000 posts. If you think I randomly created another page to DM me about Bitcoin, that's on you. I'll never say anything about any fake pages ever. You'll never see a post for me talking about there's a fake page out there. It's like that's on you. If you thought I created a fake page to DM you about Bitcoin. That's my thoughts on that. You'll never see me do one of those fake page posts. Just,
that was my mentality until a young man literally got scammed out of $6,000 from a fake page, and I just felt sick to my stomach hearing that. So I'm like, okay, let me put this out there just so people know that that's not the case.
Okay, cool. Maybe I'll change my tune. We'll see. If y'all got scammed by a fake me, let me know. I'll change my tune. So yeah, appreciate it. Thanks for joining us. If you listen to this song, please leave a review on the Apple, Spotify, wherever you're listening. It helps the show get out to more folks. Like it if you're watching on YouTube, you're still watching, you definitely like the video too. So do all that, and see you all next week. Thanks.